Simon Sinek once said that the point of a business is not to make money, it's to fulfill the business's mission. And the business's mission is only empowered through the collection of revenue. I'm paraphrasing, and frankly, I said it a little bit more eloquently than he did, but you get the picture. Today's interview is a guy named Justin Maxwell. Justin is a wealth creation specialist, and actually he has worked one-on-one with over 1,000 seven-figure net worth individuals, which if you do that math, he has worked individually to help create over $1 billion in personal net worth for entrepreneurs exclusively. And what is the point, other than fulfilling the mission of revenue, if not to create profit? And what is the point of creating profit if not to create wealth? Justin is an expert on this topic, and we had a really cool conversation starting from a wealth perspective. And how does a wealthy mindset affect the way that we look at generating profit and the way we look at generating revenue? Really, really exciting interview with a very smart dude. Let's do it. Justin Maxwell, the wealth creator, on my podcast. Thanks for being here, man.
Yeah, thank you, Brian. I'm excited. We just met a few weeks ago, and I'm glad that we get to chat again today.
Yeah, we were at the same conference together, and I was telling you the other day that there was a lot of presentations. A lot of them were great. I was just working. So, when you're working a conference, you don't really get to enjoy the conference. Yeah. But you started talking, and I was like pulled in by your topic. And I actually sat there and took pictures of your slides. And you were the only person I did that for. I was like, man, this guy has really thought about this stuff. And it was exciting. So that's one of the reasons I was like, we just have to have this on the podcast. In some ways, you're a little bit of a tangent of our topic for sales, but I actually don't really think that. I think this is an incredibly important part of what the MSP Sales Podcast is all about. What is the whole point of making sales is driving revenue. And the whole point of driving revenue is driving profit. And then you take it one step further, which is really what I want to get into today. What's the whole point of driving profit is driving wealth.
Yeah, that's the reason most business owners start their business, at least subconsciously, to make, there's some sort of future out there that they want to create. Usually it's this financial freedom, or they have some sort of legacy they're trying to create, but there's something that they started their business for that the profit creates. And a lot of business owners lose that. It just turns in, I just make money to make money. I spend it, but they've lost the sight of where they're trying to get to.
So maybe this is a cheeky or a dumb question, but can you talk to me about what is the core difference between money and wealth?
Yeah, I think the easiest way I like to think of it is wealth gives you the permission to perpetuate the life you're living. Money has to be earned over and over again. So I like to view it on the imagery of, if I'm on a treadmill that's spitting money out the back of it, if I'm on that treadmill, the only way the money comes out is if I'm running. And so if I want to have the money, I have to run harder. Wealth is I don't have to run anymore to create the money. The money will start creating the money on its own. But it all comes down to the lifestyle I want. And people forget that's why you make money in the first place. That's why money interacts, is we're trying to build the life we want to live. And so wealth gives us the permission to live the life we want to live without having to run the treadmill to constantly earn it over and over and over again.
Right. So you having been on this journey with so many people, do you have a rough idea of how many 7 or 8 figure individuals you have sort of worked with?
Yeah, so individually, I've worked with probably just under 1,000, but as a company, because we have lots of different aspects of wealth and financial and legal professionals that we work with, we're deep into the thousands of business owners that we've been able to touch and help and at least do something for in some way.
And almost all of those people are business owners, right?
All of them, 100% of them are business owners, yeah.
This is something that plagues our industry, as you know. Probably one of the reasons that you're really focusing on the industry now of managed services is there is actually quite a bit of money in our industry, but there's not a ton of wealth. We could probably talk all day about that, about the E-Myth, the technician, right, that's turned business owner, who's sort of like, all I know how to do is fix this problem, and I guess I'll just start billing $1 an hour more every year for it, and then one day I'm dead. And that's kind of as far as we've thought because we're so obsessive over the craft. But why do you think our industry has such a hard time translating revenue into wealth?
I think for me, so my journey of how I even became where I am now, I had the perception when I first started my entrepreneurial journey that like wealth was just a common byproduct of business ownership. Like I made the assumption that if I start a business, like wealth is going to follow naturally. And the reality of it is it's not just the managed service industry, but the managed service industry is definitely guilty of it. It's all industries. Like business owners in general have a very difficult time getting their money to actually transfer into wealth. And I believe there's never a single diagnostic of this is the primary reason why, at least in my opinion, as to why things don't happen. But I think one of the issues is that business owners are not everyday middle-class Americans when it comes to what they're doing to earn their money, but yet they're following the financial model for the everyday middle-class American. And that includes, I have someone that files my taxes. I potentially get an investment manager who helps me invest a portion of my income. Maybe I get some life insurance. Maybe I get a will and a trust. Like everything's a maybe, and it's very ambiguous as to the best way to do it. There's no continuity. It's just kind of this enigma of, I just got to get to a scarcity number of if I can just get 2 million saved in investments, I'm going to be able to live the life that I want to live. That's like the end goal of most Americans' financial planning and aspirations. But when you're a business owner and you start making $100,000 a year in personal income, and then you're making 200,000, and then you're making 300,000, like that's not normal American income. It's actually fairly significantly more. Like if you get to 300,000, you're almost like you're 3% of America's earners in America. Like you're way above, like you're not most people anymore, but you're still following this model of, I just got to get to the basics. I got to create this 2 million, like everything's backwards. So because that's your target, that's where you're going, you're going to end up losing money along the way because there's no definition. The definition of it isn't big enough. You're making more money than what your end target is. So you're just going to spend money and lose money and leak it all over the place without a target. So I believe that that's one of the contributing factors is that we're trying to be middle class, W-2 regular Americans when we're no longer that anymore.
I just got happy by everything you just said. I'm going to ask you about a bunch of those ingredients. Before I do, this is a perfect time to tell people a little bit about what you're doing right now. So talk about what you do and why I met you on a stage.
Yeah, so that problem that is named was the thing that I think I identified as one of the primary reasons why people don't do this. And so the solution was me trying to build a company with my business partners on how do we solve that problem? How do we give business owners the right team for who they actually are and where they can actually get to? So what we've created is a comprehensive, we call it a family office. Most people don't even know what that term means, but it's a comprehensive legal, tax, and financial team that are all rowing in the same direction, that only work with business owners, that know the business owner journey, know how much money they're making, know what they're experiencing with the fluctuations in their revenue and their income, and understand that world, but also understand their potential so that they have a comprehensive team that all rows in the same direction of where they want to go. Instead of just rowing to average, we're trying to row into great and to who they actually are. Mm-hmm. So we have tax, we have financial advising, we have insurance, we have estate planning, we have how do we make your business an asset? It's all centered on how do we help you reach your maximum wealth potential?
Conversation that I've ever decided I wanted to work with somebody myself. I'm like, great. Help me get where I want to go? Because I have really, really ambitious goals. I'm really excited by all of this, but I want to talk about a phrase that you use. You use the term scarcity number. Talk about that a little bit.
Our society is built on survival. Like everyone's obsessed with how do I just get to a survival number? But survival and scarcity doesn't produce abundance. It doesn't produce creativity. It doesn't produce the ability to lean into what we want. It just says, I got to get here. We use the word need. When we use the word, I need X amount of dollars. Now that like, if we think about need, that's food, water, shelter. Like that's a necessity. So it pushes us to like be really scrappy. And if we think, this is probably a bad analogy, but Lord of the Flies like level of like, we're not thinking around how do we grow as a community? How do we solve bigger problems? It's I'm selfish. I just need this amount. And that's never been the formula for building wealth. That's never been the formula for solving problems. It always has to come from abundance. But our society has got to the point, because this is all governmental, political as well, because The government doesn't want to pay for people in retirement. So they're trying to get people to get a base amount of money so that the government doesn't have to fuel their life. So they're not having to spend tax dollar money to fuel them. So it's not just financial advising world. This is like societal, governmental pressure where it causes this level of scarcity and survival in our minds that just drives us to that. But most of the people that are driving to that are making $50,000, $60,000 a year. And actually those numbers for them are actually just they actually can replicate their life. So in the reality, the math works for them, but it doesn't work for someone who's making 150, 200, 300,000 plus. I don't know if I've articulated that well. I that was kind of a off the top of my head, but I think that's the way I'd like to say it is it drives a different type of behavior in us than one that's going to produce the results we want.
Right. Well, if we're thinking about, so let me say back to you what I'm kind of hearing is the average person, and I don't even think it's just average American. I think it's average person.
Yeah.
When you ask them, what are your financial goals? They say, I want to be comfortable.
Yeah.
Like they want to be safe. And they want an amount of money that you call the scarcity number, which is a great term for it. They want an amount of money where they can essentially live off of the interest, have a comfortable above average life, and they don't have to think about money. Usually what people say is, I want to have enough money where I don't have to think about money.
Yeah.
Because what they want to do is they essentially don't want to create wealth. They want to create comfort, right? Which is two different things. Wealth, if you're trying to build dynastic wealth, all you think about is money. No matter how much of it you have, one would presume, right?
Yeah, and I think the difference comes in what you just said, that word comfortable is the goal versus the word impact is the goal. And so the reason the person that wants to become wealthy thinks about money all the time, the assumption from the comfortable person is that they're greedy, they're selfish, and they just want to have all this money. But the actual internal goal of the person that is thinking wealthy, thinking abundant, is they actually want the money because they know what the money can do for their ability to help more people, solve more problems. Because if you think about it from a business owner's perspective, when you have more revenue, you can invest into more deliberate services that can help your customers even more. That's the way the wealthy, and the way I'm describing it, are trying to think around why they want more money, is because they can now make a bigger impact into whatever touches their soul or whatever who they are as a person and the impact they want to leave. It's the difference between comfort and impact, I think, is the primary gap there.
We need to circle back to that. I've never thought of it this way. I want to talk more about this. So a person who's driven to make impact, the analogy you just used, hey, if I can charge my clients more money, I can afford additional services to increase the quality of their experience with me, and I can increase their transformation. You know, like Hormozi says, charge your clients enough money to be able to pamper them.
Yeah.
And if we replace clients with sphere of influence and revenue with income, that sounds like a formula hack for somebody who wants to, if they're thinking, how do I get out of my pauper mindset, my poverty mindset, or even my middle class mindset, this isn't a classism shift. These are just labels that we use to define spheres of thinking, which have been indoctrinated, to your point, and even institutionalized. But if we say, how do I make enough income so that I can increase the quality of life and the transformation for my entire sphere of influence? And that's the definition of, potentially, of impact-driven wealth.
I really love what you've defined there. I think that's an extraordinary way to view it. And everyone's going to be different with that. So some people, their sphere of influence is their community. Some people, it's just their family. Some people, it's political. Some people, it's, I want to move into the education world as my space, and your sphere of influence can grow. But you have to view it that way, because every dollar that you make extra is always going to that sphere of influence and that impact. And so now you're fulfilled, you're not feeling greedy, and you want to do more and more and more and more of it, because that's who you are, and your sphere of influence just keeps getting deeper and deeper, and maybe even grows into another group of people, because now you have the capital to go invest in that group as well. But I think this analogy is a great way to shift from, I'm afraid to make more money because I don't want to be seen as greedy, to I have to make more money because I feel a calling to really help this sphere of who I feel called to help.
I want to ask you, we're going to pivot to revenue generation and the sales side of this in a minute, because I think this is all really pertinent. But first, I want to ask you, why are you so passionate about this? Because you can tell in your face and in your voice and your demeanor that there is a charge that I perceive underneath you that's not just, this is the right thing to do, but How'd you get into it?
Yeah. So I'm going to try and describe how this works. So my family is the epitome of always average. Like if you go back to my family history, no one has ever been like, oh, that person really excelled and made a whole bunch of money, or not even money, but just did something big. We've always just been, and that's not a bad thing. Like we have really smart people in my family history. We've had a lot of great innovators in engineering and science and math, but it's always been, I work for someone else and I just do the thing that I'm supposed to do. And we always just end up doing average things. And for me, like, I feel like I'm the person that has been to take all of that past, and I'm going to call it goodness because they did good things. But I feel like an emotional, spiritual tie to those people to up level the trajectory of our family from average to here to something superior to average. And now our new baseline is this. So now we can help even more people. So we can take all of that great things that happened in the past, and now that's the baseline of who we are as a family, and we can excel it forward. And I realize that sounds, well, I don't think people think about their families this deeply, but that's the driving factor for me. And then because I'm thinking that way, I believe that other families, other entrepreneurs have that same spiritual calling inside of them, and I just have to awaken it. And so it's like I'm trying to awaken people that they're the one that can bump their family trajectory up 1 notch, 2 notches, 5 notches, 30 notches, however, how big they want to go, to a new baseline, a new standard, a new floor of where they want to go. And for me, if I can raise the floor for families, I believe that's how society changes. I believe that when you have families thinking abundantly for generations, those children that are born in the future, they're not thinking the way I was thinking when I was growing up. They're thinking abundantly. They're already thinking about problem solving. The baseline is not trauma. The baseline is not poverty. The baseline is not middle class. So now they're going to solve problems that our society today cannot solve because they're not even thinking around the things that are holding our ability to solve problems. That's political, that's climate, that's money, that's poverty, that's any avenue of what they're going to create is going to be completely different because I've raised the floor. But that's the driving factor for me, is I believe that happens in families first and foremost, and I want to help families create that. So it's for my family alone, but I think I can replicate that into other families.
Yeah, I love that, man. Thank you for sharing. My joke, when people ask me how much money I want to make, the joke I always make is, I want to be so wealthy my kids are assholes, which is a joke, of course, because everybody knows what that means, you know? But in reality, I want to have so much leverage that, we get to think like we're not building with our hands, we're building with cranes, you know? That's exciting to me. That's a really exciting way to think to me. I want to say one more thing about, so on the topic of wealth, obviously you specifically work with entrepreneurs. This is a bit of a pet peeve of mine in general. It's something I've been thinking about a lot. Obviously, you and I are entrepreneurs. Yeah. I would say 75% of listeners of this podcast are entrepreneurs. But a good 25-30% of them are not entrepreneurs. They're salespeople, which is a different type of entrepreneur. I think in many ways it's even more noble to want to be performance-based employee, but you are laying down excellence and you are building a legacy, like some other people are benefiting from your excellence, you know?
Yeah.
And you're helping other people create their own dream, and that's pretty exciting. One of my pet peeves I get into, and I listen to a lot of money debates. I'm going to give a quick caveat that I have a zero tolerance policy to talk about politics, especially with strangers, because everybody's a psychopath now, including me. But I listen to money podcasts or whatever, and everybody's advice is to start your own business. They're like, the way you create wealth is to start a business. But not everybody wants to start a freaking business. And do you really think you have to be an entrepreneur to create generational wealth? That actually sounds ass backwards, because who's going to work in all of our businesses if every single person is an army of one? We're never going to actually have any real momentum or communities driving other people. We need people who actually want to join a vision instead of creating a vision. And I think those people deserve, ethically, fundamentally, psycho-spiritually, the right to create generational wealth in that pursuit. So that, I don't know if you have any thoughts on that topic, but I also want to ask you, what advice do you have for somebody who doesn't want to lay their life down for a business they want to join another existing movement, or they want to take an ember of somebody else's idea and they want to bring it to life into a fire as a partner, as an operator, as a head of sales. How does that person create wealth?
Yeah, so I think that this is really good. I'll share my thoughts. So I think for that person, number one is if you're going to go that route, well, yeah, either route, you have to do the same thing, but you have to become the craft expert. Like you have to become so good at your job that you are indispensable. Like you become tied to the profitability of whatever you're building. But I think along the way is what I would encourage those people to do is learn the skills of what it takes to be the entrepreneur. So like, you don't have to go leave. You can like just be in the meetings that decisions are made. Look at how things happen when we choose to do X, Y, and Z. What was the ripple effect of that? So you're being very observational to the overall business journey. And is what you're doing is you're deliberately saving enough money that you're going to be able to go buy your own thing someday. So you can go buy it. You don't have to build it from scratch. You're going to buy something that's already profitable, that already has the revenue you want. And you have learned enough through your observations and interviews. And this isn't this, when I say that, learn enough, like you have to be deliberate about this. But the way because I view the ability to solve people's problems through business as the key to generational wealth, but you don't necessarily have to be the initial entrepreneur to create that. So you can go on this 20-year, 30-year journey where you're just on the ride, making a lot of money along the way. And the way I'm just going to add one caveat and then we'll get back to where I'm trying to go with this, is have enough confidence in yourself to ask for equity, to ask for upside, to ask for the ability to take part in this journey because you're on it. You've committed to yourself. You're not going to go be an entrepreneur. I want to be a part of you, but I would love to be a part of the upside of this as well. So now you're negotiating, you're standing for yourself, that I don't just want to get paid an income. I want to have an owner's mindset that I actually have upside in what I create. And that could be equity. It could be that you just are so confident yourself that for everything that I create, I want a piece of something else. I want some sort of profit share or revenue share. And I just want more than just a salary. So add that into yourself. But when it comes to the end, when you do exit that thing and you're now moving into the next phase, what you're doing next, you've observed and you've learned enough that you can now go replicate it without having to start from scratch. So you can go buy businesses and be an investor in businesses. And now you are the manipulator from the board level, not the operator level. And that's how you're going to continue to grow your wealth, not through, I love investing in other people's assets. I think that's an extraordinary baseline, but the peaks of where you push wealth up is when you have control over things. And so to me, that can be a journey where you actually can create control, but you haven't had to go do it by falling down on your face and don't have the desire to be the person that fails in entrepreneurship and lose all this money. You've been able to ride with someone else, grow with someone else, be a part of someone else's journey. And you've learned enough that you can now go replicate it by being an investor in other businesses that you actually have say in, control in, and can manipulate to help them spike and grow and continue to perpetuate your growth. So for me, like my generational model is no one gets any money. We give money and we invest in ideas of the individual family members. So we'll invest in you to go buy businesses, to be essentially our trust becomes a little private equity firm that we are investors in businesses and we grow them. So that's how I encourage people that are the person you're thinking about to start thinking bigger on, I'm going to learn the ropes, make a lot of money, and I'm going to become this someday and move towards being an investor in a business. So I hope that was a decent answer.
It's a great answer. Yeah, it's a great answer. I think that's fantastic. It's a perfect segue as well into wealth is revenue. And call it, let's say phase 2 is profit. And then phase 3 is like post-profit. What are you doing with the money that you have in your hand? So we've talked a lot on this podcast about running a profitable business with managed services, specifically with an operation that's as intricate as ours. It requires a steady hand on the wheel, constant monitoring, high degrees of business acumen. It just requires intention. Because if you're not intentional running any business, your profit will escape. Right? It will all get sucked higher and higher up into the middle of the P&L, and there's nothing on the bottom anymore, But I want to talk about, here's the question. Are there the wealth creation principles that you're describing? Which of those, if any, can be transferred into revenue creation? How do we think like a wealthy person And how does that way of thinking help us actually get more dollars in the front door of our business?
Yeah, so there's this cool chart called the Ansoff Matrix, which I really enjoy. And it helps answer that question because we can look at our business from above and decide, if I keep doing what I'm doing, do I just need to like pour more money on the front end of marketing and sales so that it drives through? Or have I already like maxed out that marketplace? Like, is there anything else I can do to that marketplace? When you're looking at it that way, well, I could also go network at this event, or I could go here. Now let's go do those things and try those things to see if that generates more revenue. But it allows you to do, what am I doing with my current market? Like, have I exhausted it? And for most business owners, the answer to that question is no. You've not exhausted your current market. The question becomes, how do I reach that market more often? How do I reach that market and actually close them better? Is that like, where's the default? Are we just not closing? Do we need better salespeople? Are we not fulfilling them very well, so they're always leaving? Like, we have to look at the current state of everything that we are at, like our current marketplace of where the reality is. But once we know where the current market is, and most people haven't even looked at this, they don't even know what their market is or who they're actually serving fully. You have to know who your market is, and then know, like, have we exhausted that market? Have we burned up that entire thing? There's no one else that we could sell to, or there's no chance we're going to steal from our competitors at the other people out in the marketplace because they're just at the current stage better than us. So if that's the case, now the question becomes, well, do I go to a new market and try and infiltrate a new market? Do I partner to get into that new market? Do I buy to get in that new market? Or do I JV to get into that new market? How do I get into that new market? And is that new market going to create more revenue, more profit for me? Like, you can ask these types of questions. So we like to say, you, on your current market, you want to push that car pedal to the metal all the way till you run out of gas. But when that current market is exhausted, now we look at, how do we get into other markets? And other markets can be partnered, JV'd, or bought to get into them. And the decision on which one of those you do should be based off of how, like, I'll say this, partnering is way easier than doing buying. Buying is a much riskier thing because you're having to put capital out to buy. But partner, I can test the market with our idea. Can we go partner with another firm in a different market that subsets a different group of people than us? And if so, let's go make a relationship with them and see if our product, our service is attractive to that market before we buy, to kind of test the marketplace on, is there something there? If there's something there, now we have the permission to buy because we've tested it with a partner first. But a lot of people like to, this is not just MSPs, but they'll do a market they haven't exhausted yet. They'll say, well, I want to have more revenue, so I'm going to go into a new market, and they'll start from scratch in that new market. And that's like the most ineffective way to start a new market, because you have no idea if that new market's going to respond to your message. They have no idea who you are. You have to spend a ton of money and time and energy, and you end up burning yourself out trying to get to this new market when you could have just pushed really harder on the current market, or gone and partnered with someone to see and test that new market before actually just trying to start from scratch. You see it with like dentists and chiropractors, where they try and move from one city to a next, but they don't even know if that new market's going to respond to them. I just rambled on for a little bit, but I hope that was helpful for your audience.
No, it is helpful because you obviously know how to drive revenue, and I have a theory that your wealth creation mindset trickles all the way up to phase one of wealth creation, which is revenue creation, like the ability to generate money. The simplest way to put it for anybody who's like, how do I make more money? You make money because you have monetizable skills. Yeah. And that you would then align those skills with markets and opportunities where you can get the most leverage for it. You've heard this analogy many times, but a bottle of water in the grocery store is 25 cents. At a baseball game is $5. Yep. At a nightclub is $20. In the Sahara Desert, it's all the money that they have in their wallet. Yeah. And all of those people are fine to pay that price. Maybe not happy to pay $20 at a nightclub because it's the only way to get water, but you understand what you signed up for. I have one access to get water, and it costs what it costs. So, people often say if you're being undervalued, it means you're in the grocery store and you should be in the desert. And you don't have to change the quality of the water. You just have to change who's buying it, why they're buying it, and what other options they have. This is for any employee who's here. If you're like, man, I'm not making enough money, or I really am undervalued. Okay, you actually have more control over that than you think. Yes. You just have to be willing to get up and go somewhere else. You know what I mean?
Yeah, 100%.
And getting that leverage, that's a way of thinking about, how do I get more leverage for my time, which is the only way as a non-primary owner contributor, as like even an owner contributor, like you're on the cap table, you have 1% of your business, head of sales, 5% of your business, COO. You need to make as much money as you possibly can for your hours and then get leverage for that so you can take the mezzanine revenue, the income that you don't have to spend on your life, and then you have to put it to work for you in other places. I mean, maybe I'm being oversimplified, but to me, Justin, that seems like the way to create wealth for those people in that situation, right?
Yes. Yep. I would 100% agree with that. And the words you used earlier around like MSPs having to be super deliberate, you have to have that same deliberateness to build wealth. Like it's not just going to happen naturally. It's actually a counterintuitive thing because we're built to consume, not to save. So you have to deliberately create wealth. You can't walk into it by accident. So you have to create that mezzanine level you have to create it so the money goes up there automatically without you making decisions, but you have to build the system that puts it up there. It's not just going to rise up there naturally.
Right. I have another question, which is entirely self-seeking and might not even necessarily serve the momentum of this interview, but I'm going to ask it anyway. I want to hear your thoughts on this. For Brian Gillette specifically, one of my number one motivator is ideology. Are you familiar with RICE, the RICE, the motivation model that the CIA made?
I am not.
Okay, this is for anybody. So the CIA was investigating what makes a good spy and what makes a spy more likely to become a double agent. They basically did like an extensive study on psychology of motivation. And they came up with there's really only 4 things that motivate people. They called it mice or rice. So number 1 is reward. Number 2 is ideology. Number 3 is coercion. Number 4 is ego. And ego, sometimes we think of the word ego as a character flaw. We conflate the word ego with arrogance.
Yep.
But ego, I mean, if you read like Freud, ego and it are just a part of the way that the brain works, the way that we process information, the way that we observe self. But ego is about what it sounds like. For me, my number 1 is ideology. I can get behind a concept more than anything, and I will die for an idea. It's just the way I am.
Yeah.
My number 2, by far, is ego. By far. Yeah. I am a status-motivated individual. It's on my vision board to buy a Rolex 1908 and a Rolex Submariner because the 1908 is great because it's a Rolex that doesn't look like a Rolex, which is like the perfect combination for me. It's like I get to feel amazing about myself, but I don't have to look like a douchebag who wore a Rolex to this thing so that everybody knows I'm successful.
Yep.
And then the Submariner, because I've seen a lot of them, it's a quintessential Rolex, and you can get it for $15,000 to $25,000. That's so much money to wear on your wrist for a guy who doesn't even I only wear a watch like a day a week.
Yeah.
It's an example of what I mean. I'm a status motivated guy. Let me get to my question. I can rationalize anything I want. I guess anybody can, but I'm famous for it. I also have a superpower of being an opportunist, and I see future value in every single thing that I buy. In the Strength Finders Index, they call that the input strength. I can see value in everything. I'm the kind of guy who collects stuff.
Yep.
So I see opportunity in every single thing. I'm the kind of guy who could say, if wearing a Rolex is an investment, because I'm going to create opportunities and I'm going to have a stronger impression with key individuals that are going to unlock new opportunities for me.
Yeah.
Or my practical example I go back to is I started flying first class here and there within the last couple of years, only situation. And a big part of it, the first time I flew first class, I was like, I honestly sat there and I almost cried because I was like, what would my dad say about me?
Right.
He would be so happy that I'm in first class. But I sat in first class on a way to a conference, and the guy next to me is a USC business school guy and takes my phone number. He asked me what I do. I told him what I do. And he asked me to give a guest lecture at the USC Business School about sales. Would I have had that conversation in row 48J? Like,
no.
I don't know if I would.
Yeah.
But this line of thinking for me, it's such a slippery slope because you could just be like, well, I need that Porsche. It's for my business. I need another suit. I have to live in Beverly Hills. You know what I mean?
Yep.
I want to hear what your thought is, because you probably have had this conversation with a lot of people like me who are status motivated, but they also can create opportunities out of things like that.
Yeah.
Like, what's your general advice to somebody who thinks the way I think in the terms of for creating overall wealth?
Yeah, I think for that situation, I think we need to try and turn into we need to add logic to the situation, because in some instances, like you're describing, it actually logically can connect to that. Actually, it can. But so the logic, and there's a few ways to this, because nothing is guaranteed anyway. So like when we go out and try a new marketing endeavor, like we might love it. It might sound great on paper. Other people have had a lot of success with it, but it doesn't end up working. We spent money, time, energy, and on trying to generate revenue through that thing, and it didn't work. So we have to acknowledge the fact that what you're describing really is it's almost a marketing technique. It's like I'm investing into an idea of, I think this is going to generate revenue. I think this is going to generate profit. This is going to generate opportunity, which will result in XYZ ROI down the future. Mm-hmm. But let's add one more layer of logic to it of, let's be disciplined enough to acknowledge that that shouldn't be our only course of trying to generate revenue income in the future. Because if that's all we're doing, we're just throwing things at the wall, hoping that something is going to stick. So let's see if we can peel back a layer and add more predictability to it. So how can I infuse probability into what am I going to do? So if I'm going to buy the Rolex, I'm also going to pair it with going to this event, because I know that people that I need to get in front of are at this event. And I know that if they see this on me, it's going to result in a conversation. So like, does that make sense? So like we're actually going deeper behind just doing the initial thing. And I love, this is a very basic equation, but I like it a lot. So it's X plus Y equals Z. So X and Y are the inputs. So buy the Rolex and do something else with it. And then I ask myself, am I 90% confident that if I do X and Y, that Z, the outcome that I'm trying to create, will come to pass? And if I answer no, well, what do I have to change about X and Y to make it 90%? So that forces you to spend time and energy creating a solution that you feel is 90% confident that you're going to have the Z outcome of what you're describing. And I find that when you spend that much deliberate time thinking about it, because most people don't think about, I'm just going to buy the watch, and they don't think, like, you've gone so much above that next level where you've now convinced yourself that if you do X and Y, that you're actually going to have Z happen. And you know the action steps to make Z happen at the highest probability. So that's how I would pair what you just described. Something that's emotional, non-tangible, not really calculable. Let's add something that is calculable and action to it that will enhance the likelihood that I get the Z to happen.
I love it. You just treat it like any other marketing initiatives. In those examples, right? You treat it like a marketing initiative. For example, if you are saying to yourself, I fly first class because of the connections, then you have to say hello to everyone in first class.
Yes. Yeah. You have to.
You can't put your headphones on and
fall asleep
the whole time. Then okay, that's fine. But treat it what it was. That was not an investment. That was a quality of life expense.
Correct.
And if you have the money for that expense, then so be it. But I also like the idea of budgeting. It's almost like a status marketing budget, where like, I have this much amount of money that I can spend guilt-free on creature comforts. And this is the amount of money that works within my budget. And then, so that's fine. So if I want to blow my money on some dumb thing, I can, but I budget for it annually in my own personal budget, right? I have an amount of money that's called a blow fund, and it is... my wife and I's combined is 1% of our take home every month.
Oh, I like it.
But I accrue it like a piggy bank.
Yeah.
So I end up with a bunch of money in there, and then I could buy I could go buy a snow cone machine, like no problem, because I accounted for that. And I don't have to do any mental gymnastics to be like, what's going to be I don't have to have a result of it. But I like the idea, even in the business, if you're like, okay, I'm going to spend an extra $500 to upgrade to first class, but what is the probability? What is the estimated value of that? And what's the probability I'm going to get a return on that? You know, if there's a 20-to-1 shot that I can make 50 grand, all right, fine.
Right.
But if not, then call it what it is.
Yeah, correct. I like that, because I think we can even just say, because some people will do what you said, they'll buy the first class ticket, and then they'll meet the person on accident. Like they were trying everything possible not to talk to the person next to them. They put their headphones in, they listen, they fell asleep the whole time. But right at the very end, they dropped their pen, they had a conversation, and it ends up this huge deal. That's always possible. There's always the possibility of doing something and you get some random result that's great. But is it probable? And for most people, they're not connecting. They're doing possible things, but not probable things. So we have to increase the probability by changing our behaviors. And sometimes we don't want to. We don't need to do that. We just don't care about it. And what you described there with your piggy bank and the growing to just spend money, like we don't care. You could end up buying a snow cone machine, and the salesman's dad owns this massive company, and that person gives you sales speaking and opportunities to the whole industry of the sales cone industry, and you didn't have any intention to it, but it was because it's a possibility. That can happen, but we shouldn't. We should be okay with doing things for our life just because we want to do for things in our life. We don't have to always tie it to the equation, which is what you were hinting at. But if we want to always be doing those things, I'd encourage you to add the probability measure of y, x plus y, of what do I have to do to increase the probability of having some sort of positive outcome come from this.
I know that this is like a wiry, weird path we've taken to talk about this, but this is what I want. This is the kind of stuff I wanted to get into with you, because the way you put it, even everything is a probability, even your marketing dollars, even the proven processes. Every time that you put a $500 a day budget on your pay-per-click campaign, is it not you just taking a calculated risk that you're going to get more than you spent? Now, it's not a gamble if it's well researched and documented and data driven. That's a high risk. There is a difference between a high risk investment and a gamble, which is why for some people, and this is going to be a weird pivot, but for some people, for like 100 people in the world, playing poker is a high risk investment.
Yeah.
And I'm going to use a poker term I'm going to bring in here because I think it's related to what we're talking about. There's a term in poker called EV of a hand. Mm-hmm. And because as you know, poker is largely probability driven, but it's also a high degree of skill. Just because you know, even if you have better cards than somebody every hand, you could still lose at poker. I used to play quite a bit of poker when I was a teenager. And he went to this poker house all the time. And I made more money than I needed to. And I just blew it playing poker. And I'm like, well, I could blow it at a nightclub or I could blow it playing poker. I don't really need to make money back. This is a hobby, you know? Yeah. But one example that comes to mind that I learned this, one of the dealers was on a break and we were playing a cash game and it was heads up, just he and I. And he just took all my money so fast. For starters, he had watched me play for a long time and he knew all my tells. So he just took all my money and it was easy. But I remember there's this one thing where I had pocket pair, I hit the set, which means you have 3 of a kind, and he explained to me estimated value. He said, you bet too little and then you bet too much. I'm like, how do you know that? So there is a 1 in 8 chance that if you have a pair, it will become a 3 of a kind. 1 in 8. So here's what that means. If you're going to bet into a pair, if you're going to bet into the probability of it, you have to bet in such a way, both as a percentage of your overall stack and as a percentage of the amount of money that you want to make, that you can invest a small enough amount where you can lose 7 times and survive to the 8th time, but also so much that you will make greater than 8-1 essentially on the investment because you had to lose 7 times in order to win the 8th time. And of course, it's not guaranteed that the 8th time it will happen or that you'll ever see a set more than once in a night or even once in a night. But if you're betting on a pocket pair, but you have to win a set, right? Like there's an ace on the table, you have a pair of kings. All it takes is one person having 1 ace and your pair of kings is worth nothing. So you have to bet on the 1 in 8 chance that you hit another king. So it's called estimated value betting. And you think about the probability of how many times you're going to lose before this wins. And I've thought about that for almost 20 years because that's exactly how outbound works. It's exactly how inbound works. I make 500 phone calls a week, understanding that the probability of this phone call to have a conversation is like 1 in 8, 1 in 12. Yeah. And the probability of a conversation being in a buying position is 1 out of 100 because only 1 to 3% are in a buying position. That's why I have to invest the amount of mental energy, a small enough amount of mental energy on every conversation that I can afford to do it 500 times, but also be listening intentionally enough that I will hear the 1 in 500 that's the right opportunity. And I have to make up to 500 so that I can find that one great opportunity per week. There is an estimated value of 1/500th of a lead in every single cold call. And I have to think of it that way, going, this is what I'm in for, and this is how I'm going to win. But if I say, I really need this to work or else I'm giving up today, I've already lost. I've overvalued that phone call mentally, emotionally, and I'm not going to be able to stay in the game long enough to get the payout.
Extraordinary analogy. I think that I feel like that's one of the reasons why business, because MSPs are not immune to this. There's people that will reach 7 figures in revenue because their sheer grit and will and grinding, and they just push through everything. But that has a ceiling to it. And so you have to start behaving off of the probability of what you're describing. What's the estimated value of this decision? And is that estimated value enough for me to make that decision? And too many people don't make their decisions by doing that level of detail of analysis before they make the decision. They just do it and then they see the consequences after. And I call it because you see this at masterminds. You have all these great speakers come on and people just start grabbing all the different ideas and they just start mismashing their Frankenstein business together, hoping it becomes a solution. But if you took the principle you're describing, the estimated value of all these decisions, and really did a deep dive in all of them, you wouldn't choose 98% of what you just grabbed. You'd choose the one or two of those things, and then that would be the thing that actually paid off for you. So I think that level of analysis is how you go from average business that's doing good and you've had some success, you're making some money, to now I can start being more enterprise level. And because that's how corporate company, you think Apple makes decisions just by a whim and throws, they're going to look at the estimated value of every decision that they make. And I realize that's hard for business owners to do, but you have to start thinking that way if you want to become that.
I love it. Is there anything else that we need to cover, Justin, that we haven't talked about yet? I mean, we've talked about wealth creation mindset on the front end. One of the things maybe we should talk about real quickly is, let's say a business is making profit. We talked about this a little bit, like how does profit become wealth? There's a lot of podcasts people can listen to of like, okay, I'll go buy a laundromat or I'll put in the S&P or whatever. I think M&A minded. We all know there's a lot of stuff in this. This is a loaded question, but what is the number one mistake that you see for people who know how to create revenue or even create profit, but they don't know how to translate it to wealth?
Yeah, so they're not viewing themselves as investors. I think there's two things. It's not just one, there's two. So they don't view themselves as investors. So they abdicate responsibility to a financial advisor and they just say, I need you to make wealth out of this for me. But that's not how wealth is created. Wealth is created by the individual. Wealth is created by your genius, your ability to learn and think and make decisions. And so mistake one is just abdicating to someone else and hoping that they're going to create the outcome for you. That's not a very probable outcome for you. The second is the chasing of the sexy thing. So they're going to chase things that they know nothing about, but it sounds good because their friend did it or their neighbor did it or another MSP owner did it, or there's a group of MSPs that are all doing it. Like they're doing it because they're following the crowd. So I'm just going to throw out a whole bunch of things that people will usually chase. They'll usually chase real estate because everyone says you should get into real estate. So I'm going to go buy a family home and I'm going to rent it out. And then they hate it. They don't like the process. Their tenant destroys the house. They lose all this money. Like Bitcoin, they chase cyber cryptocurrency. And they do all of that. But they're not doing it because they know about it, but they're doing it because they think that one investment is going to create the financial independence and wealth for them. So you don't chase things. You come up with a philosophy around how you want to invest and grow your money. And then you hold yourself to, I'm going to keep that philosophy. So I'm not letting myself be distracted. So for some people, that's buy and hold. They're just going to have a 60-40 portfolio. They're going to let it do its thing. They're not going to be distracted by it, and they're going to do it. Other people, they are going to go all into real estate. They're going to become a real estate professional, and they're going to be really good at investing in real estate. But they chose to become good at it. They didn't abdicate responsibility. They knew what they were doing. They developed the skills to be an investor in that asset class, and then they went and did it. Our belief is that we believe the business is the best investment. So let's make sure we're focused and dialed in on making that as most valuable as possible. So viewing the business as an actual lever that I can pull to grow my wealth so I can increase its value deliberately. And then I pull chips off the table, and I don't want to be distracted by the investments outside my business. And the distractions come when there's volatility. So when there's dips, you start freaking out. Should I sell? Should I buy? Like, I don't know what to do. So now you're distracted from your main investment, your business, and you're off to the side. So our belief is we got to create a portfolio that's as less volatile and distracting as possible. Let it do its thing while I grow my business. And because this just compounds and does its thing, it will grow over time. But I'm pulling the business lever so that I have two wealth pools at the same time that I can cash in at a later date. And we believe that the less volatile portfolio is an asset class diversified portfolio. So you have real estate, you have public markets, you have bonds, you have commodities, you have hedge funds, you have private equity companies, you have some private debt opportunities. Because all of those are on different market cycles and different volatility cycles. The public markets dip very frequently, but you don't get caught up in that because the whole portfolio as a whole is staying relatively stable because you have such diversity. That takes time and effort to become the investor that can handle that, because you have to become an expert at all those things. We do offer that service for people. I mean, this isn't a sales pitch, but if you're going to do that level, you need to find an advisor that understands that philosophy. But I don't care what you do. Think of it as, I got to stick with something. I'm the master of whatever portfolio I choose. And then I focus on the thing that has the most upside, which is my business. So that's the way I encourage people to view it.
Well, I want you to tell us now. I want you to tell us a little bit more about what you do. I mean, you mentioned it a little bit at the top, but I've kept you for almost an hour already. I did not expect this to go this long, but I've been really enjoying this conversation. So for anybody who just an MSP owner who's going, I like the way this guy talks. I like, what is it? The cut of his jib. And this is exciting stuff. Give us the quick rundown on sort of exactly what you could do for an MSP owner, and then how they would get in touch with you.
So we can provide a full service tax, legal, and financial team that can help you create the most probable outcome around your wealth. We own an accounting firm that helps you proactively plan around tax reduction. And we deliberately help you save taxes, not so you can just let it drift into spending, but so that you can take what you saved and drive it back into your two asset buckets, your business or the other assets outside of your business. So now you're accelerating your wealth by the money you saved on taxes, because you're deliberately sending dollars that were going to go somewhere else. They were going to be spent and gone on an expense on the balance sheet to the IRS. Those are free dollars. Most people spend them when they save them. You're doing it deliberately to send them to assets. So we then have the firm, the registered investment advisory firm, that can help you invest outside your business and build that portfolio that reduces the volatility, that lets you focus on your business. We have an insurance brokerage that helps people protect what it is that they're building. So inside of that, we have lawyers that help us with estate planning and also asset protection planning, so that lawsuits become less likely. Plus the insurance tied to that helps you be more of a sure ship, so that lawsuits, death, disability, divorce, disruption, disagreement don't have as big of an effect on you when they happen inevitably at some point in your life. And then we help with, how do we make your business an actual asset? How do we make it that it's buyers fight for it instead of you have to do earnouts or have to take a steep discount or never sell it at all? How do we make your business an attractive asset for the future? And then we just have cross communication, collaboration across all those experts, so that everyone's on the same page, singing the same song, and built and focused on what is your outcome that you're trying to create, and how can we as a group help you get there with the highest probability. So that's what we do. That's how we help people. The best way to get in contact with us is, if you really want to dive deep in more research, you can go to biglifefinancial.com. You can study our website. You can book calls there. If you want to follow me more deliberately, I do post a lot on LinkedIn, and I'm also active on YouTube. So you can just search Justin D Maxwell, either LinkedIn or YouTube, and you'll find me, and we can just follow along. And then if you want to have a conversation, you can DM me or reach out in those manners.
I love it. Justin, thanks so much for pouring so much into this interview and into what you do. I think you're a real treasure for the MSP community. I'm glad you've found this industry, and I hope MSPs continue to find you.
Thank you, Brian. I really appreciate it.